All right, we're going to be covering term life insurance today, Life Insurance 101. Term life insurance, most popular life insurance out there. We're going to cover these quickly. Hopefully you learned something today. ART, annual renewable term. Not very popular, but I just figured you should know that it's out there. Level term. This is what's most popular out there, sells the most, and I wonder why that is. Well, it's very affordable. And that's what makes it real popular. So most of the terms that you're going to see out there, 10, 15, 20, and 30-year level term, okay? These are very popular. Let's talk a little life insurance lingo. Riders. What is a rider? Every business has its own vocabulary. The mortgage business, the real estate business, the financial planning business, life insurance business. Rider equals additional benefits, okay? A lot of the benefits are what's called a living benefit, meaning something you can access while you're living. So let's cover some living benefits that you may be able to find on a term insurance policy. Now, there's two different types of term insurance, okay? There's good term insurance and then there's cheap term insurance. They're all very inexpensive. But for a few more dollars, okay, you can get a good term insurance policy that'll have additional benefits which you may need. One of them that's really cool that you can find on term policies nowadays is an ABA, Accelerated Benefit Agreement / terminal illness rider. And what this allows you to do is access the death benefit while you're alive in the event of a terminal condition. Well, why is that important? Cancer treatments nowadays, cancer is blowing up through the roof in the United States, and there's all kinds of treatments that are considered quote unquote experimental. Regular health insurance will not cover those types of expenses. That's a great benefit to have on your term life insurance policy. So that's something you may want to look for. You may want to review your existing insurance and see if you have that rider. Just another little caveat here. You've probably seen a lot of those commercials. Hey, do you have a life insurance contract you don't need anymore? You're suffering from some health issues. Give us a call. We can give you cash today. Basically what they're doing is they're going to buy that policy from you at 50 cents on the dollar. You've got terminal cancer. Here's your money today, right? And then when you die, we're going to keep the rest of it. So having these types of riders basically takes the viatical settlement companies, out of business, which is a good thing because you don't want to be selling your policy for 50 cents on the dollar if you don't have to, right? Okay, so let's talk about some additional riders. There's a critical illness rider and an LTC rider. These are the two different codes. That's as far as the IRS is concerned. They basically do pretty much the same thing, and this is going to provide benefits for any type of long-term care situation, assisted living facilities, home care, that type of thing. I'm going to do a whole video on the difference between these two riders just to clear up some of the confusion out there on the difference of the two. Now, when we're talking term life insurance, okay, and if somebody asks, hey, what's the most important thing about term life insurance? It's convertibility. Having the option to convert that term life insurance to a permanent life insurance policy, or what a lot of people refer to as whole life, right? At the health rating that you received when you took out the term policy. So for example, you took out a policy at 32 years old, right? And now you're towards the end of this term insurance policy, you've developed some health conditions and you realize, hey, I still want life insurance. Well, if you have a convertibility feature that allows you to convert that term policy into a permanent policy at your old health rating, that's a huge benefit. Now, here's the thing. A couple of things you need to look for on convertibility. Okay, you may want to review your old term insurance policy. It may be only convertible through, let's say you have a 20-year term, maybe it's only convertible for the first 10 years. You're going to want to know whether it's convertible throughout the whole 20 or only 10, right? Maybe on a 10-year policy, it's only convertible for the first 5. That's an important benefit to have. So this is what I'm talking about with just some additional features. This is the difference between a good term insurance policy and an inexpensive term insurance policy. The other thing is, as far as the convertibility aspect, what products can you convert to? So a lot of insurance carriers will only let you convert to, a specific one little product on their platform. And the permanent product on the platform is not a very good product. Now, if you have a good term insurance policy, not only are you going to have all these other benefits available, they're going to also let you convert to any one of their whole life policies or UL policies that they have on the platform, right? Giving you a huge selection of what you can convert to. Another thing that I want to cover here when we take a look at this rate sheet is, can you see this or no? The numbers? Okay, if you look at this rate sheet, all right, so if you take a look at this rate sheet, guys, this is why term insurance is so popular, right? We got a 45-year-old female here. We got a 10, 15, and 20-year term, $1 million. It's very inexpensive. This is what we would call a good term insurance policy that comes with all the bells and whistles. But what I want you to take a look at is you'll see after the 10 years on here, you'll see the premium jumps from $520 a year to $9,500 to $10,400. Of course, a lot of people say, hey, what happens when I get to the end of this 10-year level term? Do I keep this policy? No. At that point, you would just let the policy go. You'd let it lapse or convert it into a permanent policy at a substantially lower price point than that. Okay, so that's what I wanted to share with you guys. And you'll see on the 15-year here, at the end of the 15 years, the price jumps up tremendously down here at the bottom. And then, of course, the 20-year runs all the way off the page before the price jump happens. So a couple of things, guys. Just remember, take a look at your old term insurance contracts. Make sure that it's convertible throughout the whole life of the insurance, the term of the policy. And then also, too, find out about their convertibility options. Do they let you convert into any product on the platform or just like one old UL policy that's really not competitive at all? So these are the things you may want to consider. Hey, if you have any additional questions or you'd like a policy review, feel free to give me a call. We can take a look at it. And the other thing I want to share with you guys too, if you're getting close to the end of your term, so let's say you took out a policy when you were 30 years old, or say 35, and it was a 20-year term, and you're down to the last 5 years before you got to renew, it may make sense to look at options today versus 5 years down the road. You'll save a lot of money doing a new term contract if that's something that you're interested in. Okay, guys, I hope this was helpful. If you have any questions, just shoot them to me. I'll answer them. And then we're going to cover all different types of insurance throughout this series. But if there's anything specific you'd like to be educated on, just, hit me up in the notes, shoot me an email, or, give me a call or whatever you like, and I'll see about getting it done for you. Okay, appreciate you guys. Talk to you in the next one. Bye.